Hello, I am Mi-Yoon from the Department of American Cuisine. Today is May 15th and let's start today's American stock news. Today as well, I am Mi-Yoon, keeping a close eye on the trends of American stock investors without change. Let's start today by reading the comments from our loyal subscribers. The first comment is from Seo-Yoon, who always leaves us messages. She is a representative subscriber who consistently supports Mi-Yoon and me. Mi-Yoon's voice had a faint echo in the last broadcast, which made me wonder about audio issues. Thanks for always leaving detailed, thoughtful comments. That's right. It's hard to hide my excitement like this. If the mood is good, you can tell right away, and when I'm feeling down, it shows on my face too. That's just how I am, and you can see it like this. I had a lot of mixed feelings back then. Rather than just focusing on my own character, I wanted to create a connection by sharing a sense of tension and nervousness with many people as we work together. So when the United States stock market plunged by 19% in early April, I thought, this is it. But now, I don't think that's the case. Even if I try to predict the market with all kinds of analysis, nothing is certain. That's why it's so hard to make accurate predictions, and even if I try to stick to my own promises, I often end up feeling anxious and uncertain. That's the reality. But fortunately, over the past month or so, as we've seen the United States stock market make a remarkable rebound, I've started to feel a lot more relieved. On the other hand, when I'm feeling good like this, I start to wonder, what if the United States stock market suddenly drops again? Should I reduce my current investments a bit? Even these kinds of worries come up when things are going well. Thanks for your nice comment this morning, Seo-Yoon. Now this time we have someone using the identification Mind Reset. Hello Miju, nice to meet you for the first time. Last year when I moved, I started watching Miju's broadcasts and got interested in American cuisine. Not only American food, but also Miju's philosophy and attitude toward life have taught me a lot. Thank you so much. I am also reading the book Choice Stocks that Miju recommended. The reason I'm writing this is because I have some questions about Choice Stocks Max Score and artificial intelligence investment strategies. Recently, as the United States stock market entered a strong rebound phase, Choice Stocks Market Score also entered a higher valuation stage. The greed stage means that we should reduce our stock holdings and increase our cash holdings, but what about the current situation? In China, the real estate sector and artificial intelligence-related stocks have seen a recent rebound, with Choice Stock also experiencing a rise in new stock recommendations. Since the market index has only adjusted briefly, it could rise again, either continue holding artificial intelligence-related stocks or realize some profits from stocks that have risen significantly, increase cash holdings, and monitor the market closely for now. Miju, what do you think? I'm curious about your opinion. This seems to be a very important question, so I'll start today's broadcast by sharing my personal thoughts on this topic. Now, the Fear and Greed Index provided by Cable News Network is currently up to 70. Just a month ago, it was down to 18, but in a short period, the market sentiment has improved dramatically. For your reference, the Fear and Greed Index is. The Fear and Greed Index is an indicator that measures the current investment situation, such as whether people are buying or selling, and tries to gauge the market sentiment and the sentiment of investors. Now earlier you mentioned the VIX, but the way the VIX is calculated is a bit different. The VIX is an index that measures the volatility of the market. The market score measures the changes in valuations of sectors in the choice table, indicating if they are overvalued, undervalued, or have rapidly changed, serving as an assessment indicator. Now, as you just mentioned, if the market score rises up to 76, it means it's entering the overbought zone. So if it goes up just a little more, it will enter a level where the market is considered overheated. So right now, if you look at the stock market, you can see that valuations have gone up a lot, and you can clearly confirm this part. Yes, that's correct. Currently, many stocks are reaching new highs in trading volume. Let me show you one more time. If you look at the list I made as a watch list, you'll see that Meta has already broken out of its previous range during the recent topping. Nvidia as well, and Amazon and .com seem to have recently hit new highs. Tesla, Alphabet, and Taiwan Semiconductor Manufacturing Company have already broken out as well. As you can see, Netflix is also being held, Uber is being held as well, and in this way, buy signals are appearing for many stocks. Now then we need to compare the two values and analyze them. The first one is this. Right now, in the current choice stocks, when you hear the word market score, it's referring to valuation. So valuation, and then another one is the market momentum. Just before the recent interest rate hike, there was great news related to artificial intelligence causing the share prices of artificial intelligence companies to rise significantly. So, when valuation and momentum are both strong, we might wonder if we should put more weight on one side. This is a question that can come up. In my view, it's momentum. The reason is that momentum tends to continue in one direction, and all the capital in the world tends to flow toward a certain direction. And for this kind of directionality to continue, there needs to be some kind of event or incident, and that's why we are called catalysts. So, before this kind of trend changes, momentum is more important than valuation. That's why previously, even Representative Kim In-jung said that even if a stock with good momentum has a low valuation, it doesn't necessarily go up right away. He said something like this. So, when the big players in the market buy stocks, it's not because they're cheap, but because they're getting more expensive. If the momentum is good, you never know how long it will keep going up. So, once you catch the trend and confirm that this direction has changed, you shouldn't be greedy and should sell at the shoulder, not at the very top. If you look at it this way, it seems like a wise approach. Now, this is the first message I want to deliver to all of you. The second point is about how much you should endure during the current downturn. I want to share some words regarding this part. Many of you may be wondering how much cash you should hold and whether your current cash ratio is appropriate. I will try to give you some advice on this part. Increase your cash ratio. Then, should you really go 100% into cash? Or since the market score is going up right now, should you keep 50% in cash? It's important to think about and consider these questions. Many people are curious. When the earnings results for the first quarter were announced earlier this year, Berkshire Hathaway's cash reserves increased tremendously. Warren Buffett is predicting a market collapse, and the cash ratio is at a record high. You may have heard similar news. At that time, many people wondered what percentage of Berkshire Hathaway's assets were in cash. Let me show you an article. What are Berkshire's cash and short-term investments in the first quarter of 2025? It recorded an all-time high of $347.7 billion. Now then, it was 30.9% of the total assets. In the past, the cash ratio of the Federal Reserve was 70% or 80%, so there was no panic even if something happened. But now the cash ratio has dropped to 30%. That's why the sentiment in the market hasn't been very good. Now, in this situation, should we expect the Federal Reserve to support the market from below and worry about this part of the financial system? So, if we assume that the market will go down, are you confident about that? Did he only keep 30% of his assets in cash? We need to consider this part carefully. If he was certain, he would have kept 100%, 80%, or even 70% of his assets in cash. So the message he really wanted to convey is this. In the end, for our investors who are betting on the United States stock market, the United States stock market is still bullish. This is where the betting happens, and Warren Buffett also said that 70% of the time, the betting happens here. But right now, politically and economically, the situation is very uncertain. So if you want to reduce your risk a little, I think it makes sense to keep up to 30% of your assets in cash. And for individual investors, depending on each person's situation, depending on their age, depending on their income level, whether they have retired or not, and many other factors, the appropriate proportion of cash holdings will be different. Well, this is just my personal opinion, but if you keep about 20% of your assets in cash, you'll feel more at ease. By keeping 20% of my portfolio in cash, I feel comfortable regardless of whether the stock market goes up or down. That's why for me, the most appropriate cash ratio is 20%. For your reference, the current average cash ratio among investors is quite low. During that time, the stock market kept rising and rising, and the stocks I own also went up a lot. So as a result, my cash ratio didn't stay at 10%. That means when the market is in a correction phase like now, in my case, it's necessary to keep up to 20% in cash, just as I want. So if some people have a 50% cash ratio right now, then I think there's no need to sell more stocks. If you only have stocks and no cash at all, then you should consider selling some. We don't know how much further the market will go up or when it will stop, but gradually increasing your level of caution is also a good strategy. So, depending on each person's situation and their portfolio status, all decisions will be different, and that's what I want to emphasize. Now, I'm sharing my personal thoughts with you like this. Mind Richnim, I'm not sure if this answers your question sufficiently. Now, this kind of live broadcast is being made together with the subscribers. Today's United States stock market news for May 15th will begin right now. Today, I'll briefly summarize the United States stock market situation, focusing on the S&P 500. As expected, there was another rebound in the Nasdaq. So if you look at the map, many sectors are marked in green, which means the sectors we favor performed very well, while the ones we don't like, such as energy and materials, drag down the market. And in this part, of course, AMD and NVIDIA are leading. Yesterday, Tesla also performed well, and Google did well too. So there was a very strong upward trend in just a few sectors. If you look at the overall market, it seems that the downward trend has continued. If you look at the actual S&P 500 by sector performance, technology rose the most with a 0.65% increase, and communication services led by Google followed with a 0.52% increase. Finally, consumer discretionary and consumer staples, both containing Tesla, increased by 0.39%. The rest are all marked in red. And that's why healthcare and materials are showing the biggest declines. And as I said before, momentum isn't looking good right now. So, since the direction is still unclear, personally, I think it might be better to wait a bit until we see a more definite recovery. The S&P 500 market sentiment has declined from 68 to 64 due to a growing number of stocks experiencing declines recently. Even stocks with strong upward momentum dropped from 49 to 48.5, so you can see that the adjustment is possible like this. Next is the number of stocks hitting new highs. The number of new highs has also slightly decreased. Until recently, the index was forming below the 201 moving average, remaining at a low level of 19.08. Next is the performance of the United States stock market. Recently, thanks to artificial intelligence, Soo Hyun-ju's recommendation, the performance of the United States stock market top picks has been good. AMD gained 4.68%, leading the market. Further gains may push its year-to-date return into positive territory. Second, NVIDIA rose by 4.16%. NVIDIA's return has turned positive since January 1st. Tesla rose by 4.07%, showing the third best performance. 3.26%, Nexter Energy 1.76%, Palantir 1.62%, Talon Energy 1.59%, Trade Desk 1.28%, 1.2%, and Meta 0.51%. Lastly, Taiwan Semiconductor Manufacturing Company rose slightly by 0.4%. All the other stocks were in negative territory, but Broadcom fell slightly by 0.13%. NVIDIA minus 0.18, Amazon minus 0.53, Strategy minus 1.15, Uber minus 1.43, Bitcoin minus 1.53. Lastly, the ProShares Ultra Bitcoin Exchange Traded Fund, which tracks Bitcoin, showed the worst performance, dropping by 3.08%. As evident from yesterday's performance, Bitcoin-related items fared the worst due to a specific reason. Marko Kolanovic is a very famous former trader who is now on the X platform. He was once a globally renowned investor, especially known for his sharp market insights. Marko Kolanovic recently resigned as JP Morgan's chief strategist. Trump said, "We are following China in crypto and becoming the best country," and Marko Kolanovic mocked this statement. Regarding this, Marko Kolanovic sarcastically said that if we accept Warren Buffett's words, it's true that we're ahead of China, but if we're ahead in some areas, it means we're giving our people false hope. He added that we should be more aware of this, making a sarcastic remark. So, that's how Marko Kolanovic sees it. Crypto and Bitcoin are still not fully trusted, and there are also not so good situations regarding the Trump administration. So I personally judge that this is a politically driven comment. Anyway, when a famous investor who receives a lot of followers makes a negative evaluation about crypto, the price drops, and when they make a positive comment, the price rises. This kind of manipulation is possible. I will briefly explain the United States stock market's leading indicators. The United States stock market, which had been rising for 3 days in a row, is now undergoing a technical adjustment. 0.36%, 0.53%, and 0.68% respectively, maintaining a negative trend overall. Still, since there have been a lot of abrupt rallies recently, I personally expect that the market won't fall sharply or plummet. Many United States experts are set to share their views on the stock market after today's closing bell. For reference, the chart experts here with me are only presenting very positive outlooks, so there haven't been any negative forecasts. If you look at it this way, that's what it seems like. Please listen to this part as a reference. This month, the stock market rally is not just a positive global trend, but also significant because the S&P 500 index has rebounded above the 200-day moving average. Let's start by noting the importance of this. The S&P 500 index is currently holding just below 5,900, maintaining its position above the key support level. The 200-day moving average is considered the average price of the index over the past 200 days. The 200-day moving average is currently at 5,755. So now the S&P 500 index is positioned quite a bit above the 200-day moving average. And the fact that this index is stably staying above the 200-day moving average can be interpreted as a sign that the momentum in the stock market is strong. The Volatility Index measures investor anxiety. The VIX exceeded 50 in early April, which is a level we are familiar with, and recently it has dropped to as low as 18. When the VIX drops below 20 like this, is the S&P 500 usually above the 20-day moving average? According to past statistics, it shows that stock prices have improved significantly afterward. Market experts say the current market sentiment is overly optimistic, leading to the current rise. Assets that are defensive, such as gold, bonds, and cash, are being held back as safe assets, so the rally could continue for a while. That's the main point being made. Okay. Let's take a look at the chart one more time. First, the expert is talking about the rally in the Blue Chip Daily Trend Report and is saying that the inflow of defensive funds is leading the rally. Now, the highest level of caution is returning to reality. He is being evaluated as a major player who focuses on the 200-day moving average. Therefore, 4,835 is the low point of this cycle as of April 7th. It means that it won't fall any further. That's the logic behind this. Second, this is Jason Hunter, the Chief Technical Strategist at J.P. Morgan. Jisoo is analyzing the S&P 500. If the upward rally persists, he stresses that the S&P 500 could potentially hit a record high of 6,147 points by mid-February, barring any exceptional negative influences. Let me show you the chart again. 6,147. This is the previous all-time high. But if you look at the current trend, there doesn't seem to be any significant resistance line above this level. So it's possible that the rally could continue smoothly without any major resistance. I'm observing the current trend, which is why I'm stressing the high likelihood of this upward momentum persisting. In the past few decades, breaking the 200-day moving average due to adjustments or bear markets has often been followed by a strong rally within weeks. Therefore, in the short term, it is possible to understand the argument that this trend is likely to continue. So what about Jason Hunter? The S&P 500 is facing resistance between 6125 and 6170, a technical upward target range. This trend could continue up to that level. So let's evaluate it again. If you look at it as such a market, well, okay. However, if clear additional momentum or market boosting news doesn't come out after this, there are concerns that the rally could stall. So, the trend that was just mentioned earlier could be broken, depending on the comments from Kathy Wood. So, if there is a huge event or some big news, the direction could change, and that's something we need to keep in mind and understand. Next, let's look at the winning streak record of the League of Legends Pro League Finals, which is quite interesting. Long term, we're focusing on the potential for record-breaking upward momentum. After Jisoo surpassed the 200-day moving average, the average return over the next 12 months was 8.6%. Currently, the expected average is a stable 10%, but 8.6% is lower than the historical average. However, despite that, it's still similar to the historical average in terms of stability. If you look at the current 200-day average, we can expect a stable trend even in the long term. That's how you should see it. Based on the current trend, it's possible that it could return to 6,270 within the next year. That's the interpretation you can make. Now, to wrap up, let's listen to the opinions of SM Mark's Chief Information Officer, Christian Zhang. Even if there is an additional drop, the outlook is that the possibility of falling below the early April low is slim. People are now saying the new low is 5,200 rather than expecting a drop to the early April low. What are your thoughts on that? Even if the stock price drops again for a moment, it probably won't fall more than 10%. That's what they're saying, that even if it drops a little, it won't go down much further. If the actual growth of the industry and the improvement of the economic cycle are maintained, The index could continue to rise further. Therefore, we remain cautious and are monitoring the situation closely. This time, let's take a closer look at SPY's chart. SPY is an exchange-traded fund that tracks the S&P 500, so you can see the movement of this SPY as a reference. It's May 14th. Currently, the 11-day moving average is above the 21-day moving average, which is above the 51-day moving average. So like this, the short-term line is at the top, the mid-term line is in the middle, and the long-term line is at the bottom. When all three lines are arranged upward, that's called a bullish alignment of the moving averages. On the SPY, the bullish alignment of the moving averages appeared on May 14th, Wednesday. You can understand it as appearing right then. Now next is QQQQQQQ is an exchange-traded fund that tracks the Nasdaq 100. For this exchange-traded fund as well, on May 14th, Wednesday, a bullish signal from the moving averages appeared just like before. We can see through the moving averages that the major stock indices are currently showing strong upward momentum. Finally, let's examine QQQ's momentum. Out of the 26 momentum indicators, only one is currently showing a buy signal, 8 are neutral, and the remaining 17 are giving a sell signal. There's one part showing a sell signal. As you can see here, the relative strength index has exceeded 70. Usually, when it goes over 70, it can be considered as an adjustment phase, so you should be cautious and consider selling. However, instead of a sell signal, the price is moving sideways in the middle due to momentum. When the relative strength index value of a stock goes over 70, it's correct to consider selling. But if you sell right away just because of that, the price can keep going up, and the relative strength index can go from 70 to 71, 72, 75, even 80, and then suddenly drop. In that short period, the sideways movement can look like a sell signal, but this is something we need to watch carefully. So, a lot of people want to use the relative strength index value as a basis for deciding when to sell. Is this the right time to do that? Therefore, it's safer to sell not when the continuously rising relative strength index exceeds 70, but when it starts to turn downward after surpassing 70. This approach yields better results. AMD was the most discussed stock in recent United States market conversations. Recently, AMD's chief executive officer additionally bought company shares worth about 6 billion won. This is positive news. In addition, I will analyze several numbers related to AMD. AMD Advanced Micro Devices stock buyback. AMD announced that it has approved a stock buyback of up to $6 billion. After the announcement, the stock price rose as much as 6%, but later it pulled back and closed up 4.68%, which is still a satisfactory result. The amount approved this time is in addition to the $4 billion stock buyback program that was already in place. Adding 60 billion and 40 billion equals $100 billion. However, even with $100 billion, AMD's market capitalization is around $190 billion, not reaching $200 billion. So the remaining stock buyback is about 5% of the market capitalization. We can look forward to it with AMD's Chief Executive Officer Lisa Su leading the company. The expanded stock buyback program reflects AMD's strategic direction and growth prospects, as well as the company's confidence in its ability to generate strong and stable cash flow in the future. After reassuring investors, AMD's stock price rose like this. Also, AMD recently announced plans to invest up to $100 million to support the artificial intelligence semiconductor industry in Saudi Arabia. Is there a reason for this announcement? And that's why investor sentiment has improved dramatically. AMD is planning to supply not only artificial intelligence, dedicated graphics processing GPUs for Humane, but also central processing CPUs needed for building artificial intelligence server infrastructure. Humane and NVIDIA are also making joint purchases. AMD and NVIDIA are mentioned as the primary suppliers in this Saudi Arabia artificial intelligence investment news. Now, America's analyst Vivek Arya from BenCub is coming out. Based on this news, AMD's target stock price has been raised by $10 to $130. If that happens, there is still more than a 10% upside potential left, so you can see it that way. In just this afternoon, I'll be checking AMD's momentum. As you can see, the stock price is coming up. Among the 26 indicators, 3 are showing a buy signal, 9 are neutral, and 14 are showing a sell signal. If you look here, when the 200-day moving average crosses around the $127 level, a complete upward trend reversal is possible. I set it up like this. Right now, all the indicators are aligned, but there's a reason for that. Do you know why? Up until now, the moving average line and the baseline have been similar, and the 200-day moving average has been slightly below them. So if it goes past day 127, it could completely turn into an upward trend. This is why we can look forward to it. Next is AMD stock chart, specifically the 1-year stock chart. As shown, there has been a consistent upward trend for an extended period. At that time, it was about 10 months ago, and it kept falling without any signs of recovery. During that long period of decline, AMD's stock price was at the bottom. So, after breaking through the upper end here, it rebounded, and now an upward trend is forming. Now, let's look at the $127 line again. It was a previous low point. That's why a strong resistance line has formed here. You may remember, but the $127 level used to be a moving average support line, specifically the 200-day moving average. So, if it breaks below $127, it seems likely that AMD's stock price will fully recover after that. Next, let's look at the fair value of AMD stock according to ChoiceStar. Do you already own it? Meisu Shinho came out on May 6th after 159 days. So, according to ChoiceStar, AMD stock was already bought on May 6th, and since then, the return so far has already been recorded at 17.8%. A smart score of 80 means it's in the top 2% overall, which is a very good rating, and the valuation is currently considered low. The target price is 156, so if it goes up to 156 from the current 118.0, that's a significant upside potential. The difference between 156 and 118 is 38, which means there's about a 32% potential increase. That's how you should look at it. Now, if you look below, you can see it displayed as a graph. The growth rate is shown to be quite low. AMD stock was once considered overvalued, but as the price dropped, it reached a more reasonable valuation. Despite price fluctuations, it remained within this reasonable valuation range. This is how you can assess it. Now finally, let's take a closer look at the moving average line. On May 12th, the short-term moving average line crossed below the long-term moving average line, forming a second golden cross. If the mid-term line crosses above the long-term line and stays there, and the short-term line also crosses above the long-term line, the probability of a trend reversal in the moving average lines increases. This is how to interpret the chart. Next, I prepared some news related to Uber. Personally, I think it's a very meaningful article that could have a significant impact. If you're interested in Uber, or if you're an investor who has invested in Uber, I think you will find this news very encouraging and positive, so please listen carefully. Uber Technologies recently unveiled a variety of new services, including high-end rides for business users, shared shuttle options, and expanded membership pass benefits. When I look at it, it's not just about getting a taxi and going to the bus terminal, but I want to give you a broader interpretation like this. First of all, Uber's new service called Uber Shuttle is coming out. This shuttle service will operate on routes with high traffic, offering pickups at 20-minute intervals. It allows users to use the service at a much lower price compared to regular UberX rides. As you can see, vehicles arrive every 20 minutes just like a bus schedule. But compared to UberX, the price has been cut in half. So they improved the bus and Uber services, and if you look at it this way, you'll see. Now take a look here. You can make a reservation up to 7 days in advance and up to 10 minutes before departure. Users can travel from a pickup spot close to their home or workplace to a drop-off point with a fare based on distance. Also, when you share a ride with up to 3 other passengers, a high discount fare is applied, which is up to 50% cheaper than a regular Uber ride. Uber is pricier and buses are less convenient, generating interest in this alternative. From now on, you can use Uber's ride-sharing feature. This service is mainly available in major cities like New York, San Francisco, and Chicago during regular commuting hours. Uber is collaborating with firms and exploring methods to integrate with public transit discount programs. If this service is used in contracts with large companies and many of their employees use Uber for commuting, it could increase the likelihood of Uber being used for commutes in the future. It's an idea with high potential for growth and high value. I want to evaluate it personally. And Uber is also providing ride passes that allow for cost savings and better expense management by fixing the fare. And these are being offered in major United States cities like Chicago, Dallas, and San Francisco. This year, Uber plans to extend the student discount policy until the end of October. The October student discount policy allows students to use Uber's services when commuting to and from school. That's how it will be. The previously mentioned ride pass is prepaid. You pay up front for a set number of uses. Within a month, you can buy a bundle of rides. So if you buy 5 rides, 10 rides, or 20 rides in advance, you can use the service at a 15% discounted price. That's how it works. Now, Uber has also announced a 2-month ride pass, not just a $2.99 or $3 price lock pass. It's currently only operating as a trial in select parts of the United States market. Earlier this year, Uber announced plans to expand the service across the United States and to Brazil. Now, the surprise is that the price tag was actually revealed earlier than expected. Through the Uber app, you can set a specific route that you frequently use. You can register up to 10 routes, and for each route, you are given a 1-hour period during which the fare is protected. During this period, you can continue using the service at the fixed price without any fare changes. That's how it works. The maximum amount you can pay with this pass is $50 per month, and if you pay $2.99 per month, you can use this new service. That's how it works. So, various new services are being introduced one after another. This is not only about shaking up the taxi market, but also about impacting the bus market. Personally, that's how I see it. So the innovative idea of Uber, which was once just a concept, has now become a reality in a short period of time. That's how I see it. Reports estimate the United States ride-hailing market size to be around $49.78 billion in 2024. During the same time frame, the United States taxi market size is estimated at $23.14 billion. So there are still a lot of sales left in the taxi market that can be taken, and that's why it's possible to value it so aggressively. The total bus market in the United States, including public, city, and intercity buses, is estimated to reach $8.664 billion by 2024, signaling a newly emerging market. So Uber is pioneering another new market, and I personally want to interpret it that way. Crucially, Uber is a company that operates beyond just the United States. So if you look at it, Uber is expanding not only in the United States market, but also globally. As of 2024, the size of the global ride-hailing market is about $191.3 billion. The global taxi market is $244 billion, and the bus market is $52.3 billion. For reference, Uber's current total sales are only $43.9 billion, and if you look at just the ride-hailing sales, it's $25 billion. So even though it's not the number one industry in the world right now, there is still a lot of room for growth in the mobility market. And another thing, all of these markets are actually the potential markets for Uber and Tesla's robotaxi in the future. Therefore, through this article, we were able to confirm that there are still many markets left to be developed. Now, this is Uber's momentum. Out of the 26 regions, 4 are in the high-income group, 7 are in the middle-income group, and 15 are mainly in the low-income group. Now, let's go down and take a look at the chart. Here, the relative strength index or relative strength index is at 70. But this time, there is also a sell signal. The reason for that is, in cases like this, the relative strength index keeps going up and then suddenly drops in the middle. So even if the numbers look the same, whether they're going up or down makes a difference. Because of that, a sell signal can appear, or sometimes a neutral signal can appear. That's how you should look at it. If you look here, you'll see that Uber's stock price went up at an incredible speed and then dropped. After the drop, the relative strength index line turned downward, and that's how you can see it. If you look at Uber's chart directly, you can see the relative strength index's direction clearly. Now, the forward price-earnings ratio is less than 33.1, and because the growth rate is fast, the price-earnings to growth is also less than 0.9. That's how it is. Sonic's growth rate exceeds 33%. That's how you can interpret it. Next is Cho Ik-sung's Uber stock evaluation. On April 21st, I bought Uber stock at $75.24. It's a rapidly rising trend, with a return recorded at exactly 20.2% so far. The SMART score of 67 ranks the stock in the top 13% overall. That's the key takeaway. The valuation is reasonable up to now. Now let's take a look at the movement and evaluation of Uber's stock. Murio, April 17th, about a month ago. At that point, the short-term moving average was highest, followed by the midterm, with the long-term average at the bottom. And all three lines were sloping upwards, so what happened to this stock after that? This is a pattern that often appears a month before the moving average lines cross. And since then, it has shown a strong upward trend of about 20 to 16%. The next news is about NVIDIA and AMD. Now, if a large-scale contract is signed between Saudi Arabia and Arabia this time, there is growing interest in the artificial intelligence sector led by the government. Now, through this article, let's take a look together at the artificial intelligence players we're currently investing in and see which opportunities might arise in sovereign artificial intelligence. In this article, I used simple artificial intelligence terminology to ensure beginners can understand. This week's biggest tech sector event is taking place not in the United States but in Saudi Arabia. Former President Donald Trump attended an official visit with major artificial intelligence figures, including Elon Musk, Ilya Sutskever, Sam Altman, and Yann LeCun. Many wealthy countries, including Saudi Arabia, are trying to establish national-level artificial intelligence data centers to fully control the future of artificial intelligence in their own countries. One of the main purposes of President Trump's visit was this very point, and the Saudi government used President Trump's influence to secure the best possible artificial intelligence technology from American companies and NVIDIA. After NVIDIA, its chips were officially announced in November 2023, they became a driving force for the rapid advancement of generative artificial intelligence. Chief Executive Officer Jensen Huang stated that semiconductors are now a vital economic resource and a nation's sole competitive advantage. This was a statement made about a year after Jensen's keynote presentation that sparked the current artificial intelligence boom. The data of language, culture, and other resources that China possesses have been provided free of charge to foreign artificial intelligence companies, and there is no way to buy back the artificial intelligence services that were created based on them. Jensen Huang, the chief executive officer, was the first to emphasize the importance of artificial intelligence. It is a diverse country with 22 official languages and many regional dialects. India is building domestic data centers to ensure that foreign artificial intelligence models do not absorb the country's rich cultural heritage, and so that new technologies and ecosystems can use the latest artificial intelligence technology under government control. On the same day as the announcement by Prime Minister Trimfer, Saudi Arabia unveiled its own artificial intelligence investment plan called Humanira. The intention of this institution is clear. It is a determined plan to make Saudi Arabia a global technology hub, modeled after Mohammed bin Salman, and to turn Saudi Arabia into a key player in the global artificial intelligence project transfer ecosystem. Humane plans to complete a large-scale data center in partnership with NVIDIA and AMD over the next 5 years. The partnership with NVIDIA is a significant step toward leading the artificial intelligence and next-generation data infrastructure sector, said Tariq Amin, Chief Executive Officer of Humane, through an NVIDIA blog post. Investors welcomed this move, and the stocks of artificial intelligence-related companies such as NVIDIA and AMD saw an upward trend this week. Although it is still unclear how much these main artificial intelligence contracts will contribute to future sales, Bank of America's analyst Ariana previously predicted that the main artificial intelligence contracts could account for 10 to 15% of annual artificial intelligence infrastructure sales. Over time, this is projected to boost sales by around $500 billion for NVIDIA, AMD, and similar companies. According to the 2024 financial report for the period from February 2023 to January 2024, NVIDIA recorded a total sales of $60.9 billion. This presentation will show how political history has changed since the start of the Trump administration. According to the Biden administration, they announced new export restrictions to prevent the export of high-end artificial intelligence processors to China. This is a direct response to concerns that major artificial intelligence companies are getting too close to NVIDIA's cutting-edge technology. G42, a government-backed artificial intelligence company in Abu Dhabi, United Arab Emirates, is the representative company. G42 received final approval to use advanced American microprocessors and build a large-scale artificial intelligence data center in Abu Dhabi under strict conditions set by the United States. However, Saudi Arabia judged that these regulations were too restrictive and tried to find a way to expand its own artificial intelligence industry independently. Trump president listened to their requests. Before the new export regulations were implemented, the Trump administration withdrew these regulations and instead responded to each individual request for exceptions. And Saudi became the first country to receive approval. There was no separate announcement during Carter's visit, but future approval remains a possibility. Chinese Foreign Minister Bian Xu remains in the Middle East. Saudi said that while he promised not to purchase artificial intelligence acceleration devices from Chinese companies under United States sanctions, the details of how G42, which received investment from Abu Dhabi's Mubadala, will manage its business with Chinese companies or Microsoft support, as well as the level of United States security inspection, have not been disclosed. The supply of cutting-edge artificial intelligence chips is still in the hands of American companies. With the strengthened regulations, companies like NVIDIA and AMD may benefit, but if the United States government continues to strictly control risks related to China, there is a possibility that the overall growth of the industry could slow down. Hamadi from the United States, Saudi Arabia, and Arab Emirates say they are dissatisfied from the start. If these countries directly invest in building artificial intelligence infrastructure, NVIDIA's rapid growth potential could increase even further. The European Union is building a decentralized cloud infrastructure through the GAIAX project, allowing member countries like France and Germany to directly manage their own data and artificial intelligence models. To achieve this, there will be a high demand for powerful GPUs. According to the Artificial Intelligence Opportunities Action Plan announced by the United Kingdom in early 2025, the country plans to secure 10 million GPUs as national computing resources by 2030 and is also promoting the establishment of artificial intelligence growth zone data centers, as well as the construction of large-scale data centers. Japan's SoftBank is building a large-scale artificial intelligence data center in Osaka, and KDDI Shifuru and NVIDIA are joining forces to construct the largest artificial intelligence center in Asia. It has been announced that NVIDIA's G200 NVL72 system will also be introduced here. As Korea's artificial intelligence, basic law, and digital bill of rights are being implemented, investment intentions are expanding to strengthen the domestic data center infrastructure and to develop Korean language models. The government is expected to introduce a system for local management of artificial intelligence services, which will likely increase demand for high-performance GPUs. Korea Economic Institute of America, International Association of Privacy Professionals, draft Digital Bill of Rights for digital sovereignty. It is expected that domestic infrastructure investment will expand, especially in strengthening data protection, artificial intelligence educational data, and computing resources. Although India has not yet officially promoted the establishment of artificial intelligence data centers within the country, the government is actively pushing to expand artificial intelligence data center infrastructure. In the future, the demand for graphics processing unit-based computing in India is projected to grow substantially. In addition, countries such as Australia and Canada, which are planning to strengthen their artificial intelligence capabilities, may also emerge as potential new markets for NVIDIA's high-performance computing investment. The impact of artificial intelligence is already being felt. The content prepared for today will be reflected in today's United States stock market. In today's video, the guest I personally like, Jin Moon Seo, is appearing. Currently in the market, Jin Moon Seo is thinking about how to approach the Magnificent 7 stocks. Among these 7 stocks, it seems that certain stocks are being evaluated a bit conservatively. Through this video, it would be good for many of you to check Jin Moon Seo's investment opinions. Today's broadcast ends here. Thank you to everyone who stayed with us until the end and listened with sincerity. Tomorrow as well, I will gather various information that can help many of you with your investment activities and come back to see you again. Let's keep fighting together until the day we all retire through investing in United States stocks. Have a happy day. Thank you. Now let's examine the impressive dividend of SM Management together. Nice to meet you, Jin Manna. If you've kept your big tech stocks despite my promise to invest in technology, you must be feeling quite satisfied at the moment. But can you still buy big tech right now? In other asset classes, there are many things that have fallen even more. In fact, many investors have been overweighting big tech in their portfolios. In other words, you shouldn't just sell all your Magnificent 7 stocks at once, and even within that group, you need to approach them selectively. Looking at recent stock price trends, especially at Google, the changes are quite clear. The blue chips in the existing stock market are shifting in a completely different direction, and in this situation, just holding on to Google's stock may not be the right answer. If you look at it overall, in this actual season, Johi analyzed 20 tech companies and evaluated each of them. Among them, out of the 6 companies including Magnificent and Fabry, 5 received an A grade. But the fundamentals of these companies are still strong. However, this doesn't always mean they're the best investments. Therefore, selective and focused access is important. Some industries in India are also showing upward momentum again. If the outlook for artificial intelligence that I imagine matches the next 1 year, 2 years, 5 years, and 10 years, this company is still undervalued and will continue to show strong growth momentum going forward. In the end, the important thing is that we need to approach it strategically and selectively. For bargain investments in technology stocks, especially semiconductors, focusing on small and mid-cap stocks with a market capitalization under 5 trillion won may be more advantageous. There are a lot of options. Among companies with a market cap under $500 billion, The artificial intelligence sector is currently the most undervalued. This company has shown solid performance compared to 2021. Currently, its market capitalization is about $25 billion, which is half of its peak. In the legal sector, companies like MOGU, DB, Pager, Duty, Snow, and Flake have stock prices that suggest the market hasn't fully recovered yet. There is a strong investment theory, and that's why all investors should be concerned about this core question. So the question is, how disruptive is this technology? And then many existing industries could be significantly disrupted by that change. There are a lot of theories about this, but the real question is, where are we right now with this technology? One way to judge this is to look at how much technologies like GPT are actually being used in everyday life. For example, currently about 20% of Google users are reportedly using GPT-based services every day. This figure is still relatively low. It means we are still in the early stages. From this perspective, if we recognize that we are still in the early stages of artificial intelligence development, when we look beyond big tech and examine other industries and sectors, it is clear that these industries have a long way to go and significant growth potential ahead. Despite all the excitement over the past 2 years, the artificial intelligence sector is still in its early stages, and this transformation is very big. That's why it's at the center of our investment philosophy. Thank you.